Most franchise brands don't fail, they stall. They get to 10 locations or 20 or maybe 30, and then they stop growing in any meaningful way. Not because the concept is bad, not because there's no demand, and not because the founder isn't smart or driven. He or she probably is. They stall because they were built to sell franchises, not to scale a franchise platform. And those are two very different things. There's a quiet graveyard in franchising that nobody talks about. It's full of brands that have 10 to 50 locations. They're kind of growing, kind of profitable, kind of systemized, but they will never become real platforms. They're stuck in the hardest place to be, complex, but not scalable. I'm Justin Kaiser, and I've spent the last 24 years building businesses. I built a franchise brand from scratch and scaled it to over 100 franchise territories in 3 years before an acquisition. And what I've learned along the way is that the core mistake most franchisors make is confusing sales with scale. They think growth comes from better salespeople, more leads, better marketing, or more franchise awards. But franchise sales does not equal platform scale. You can sell franchises and still build something fragile, something that breaks under support load, something that depends on a few key people, something that produces inconsistent performance and has no real institutional value. That's not a platform. That's a growing mess. A real franchise platform is not a brand with a lot of locations. It's not a company that sells a lot of franchises. And it's not a founder with a big vision. A real platform is a machine that reliably produces successful franchisees with predictable unit economics, standardized execution, scalable support infrastructure, and a repeatable growth engine. In other words, the business works even when the founder is not in the room. This distinction is exactly what investors care about. Investors don't invest in hot concepts. They don't invest in big visions. They don't invest in growth for the sake of growth. They invest in systems. They invest in predictability. They invest in scalability. And they invest in management leverage. They're not asking how many franchises you sold last year. They're asking, can this business scale to 100 plus units without breaking? Almost no stalled franchisor is missing just one thing. They're missing the unit performance layer with strong and consistent economics. They're missing the systemization layer with real training, playbooks, and standards. They're missing the support and oversight layer with performance tracking, coaching, and intervention systems. And they're missing the growth engine layer. The brutal truth is that most brands are built backwards. They sell franchises first. Then they try to add support later. They try to add systems later. They try to fix unit performance later. That may work at 5 units, but it starts to break at 25, and it absolutely collapses at 50. That's the difference between a lifestyle franchisor and a platform company. Now, there's nothing wrong with a 20, 30, or 40 unit brand that pays the founder well. If that's his vision, that's what he wants. That's a great business, but it's not a platform company. Platform companies are built to attract capital. They're built to scale across markets. They're built to build enterprise value, and they're built to eventually exit at many multiples, not just cash flow. This is why this matters, whether you're a founder, a franchisor, or an investor. For founders, it determines whether your brand becomes a real asset or just a job with royalties. For franchisors, it determines whether you break through your current ceiling or stay stuck there forever. And for investors, it determines whether you are buying into a scalable machine or just a growth story that eventually is going to stall. Right now, there are dozens, maybe even hundreds of good concepts out there with mediocre infrastructure in the 10 to 50 unit range. With the right architecture, they could become real platforms. And that's the real opportunity in today's market. Not starting from scratch, but turning good brands into real franchise platforms. Because selling franchises is a business, but building a franchise platform is a company. They are not the same game. They do not create the same outcomes, and they don't get valued the same way. If you want to know whether your business is built like a franchise seller or a franchise platform, That's exactly the conversations that we have here every day in Empire Franchising. Schedule a growth strategy with us today, and let's see if your business has empire potential.